Thank you, both of you. That's great. Just get started on what we're doing at the moment. Just very quickly, in the brief time we have, and I'm sure I'm speaking to all of you already anyway, Big River is focused on one thing, and that's getting the Borborema Gold Project in Brazil up and going. In a snapshot, this is where we are. As of a few months ago, we had several projects, but we've actually monetised those and focused on our core asset. Is it a pointer on this one? Is that? Of course, okay. All right, you'll see there's three projects here. There's a lithium project, don't worry about that, there's no lithium. And the other one is what we call a zombie project. It has a bit of uranium with some good gold assets, but because of the Brazilian law on uranium, we can't work on that, so that probably won't be lasting there much longer either. But that just goes to focus on the one project we have, which is the Borborema, a large project in northeast Brazil. It's not anywhere near the jungles, nowhere near the rainforest. It's a semi-arid area. We have done previously done a feasibility study on this. Is that right? That's quite all right. Okay. We have resources of about 2.43 million ounces, and there was a reserve calculator on that as well. We're looking at doing a stage project on this. We're looking at doing a feasibility study, which would finish again in the end of November, by which stage we're looking to go into project financing, and as soon as that's achieved, we'll be looking at production pretty much straight away. We have all our permits in place, all the environmental, all the installation permits, so we can actually start pretty well straight away. In terms of looking at conserving water, we were looking at recycling and redrying out the tailings and using dry stacking, so we don't have a tailings dam in this current climate in Brazil. That worked out to be very well for us. The infrastructure is very good, but the points to take away from this discussion, I guess, are these main points here. We're looking at constructing starting next year at 70,000 ounces per annum, completing a DFS by this quarter in November. We have strong local and state support. Our taxation rates will be quite low because we're eligible for a remote area allowance. And we have a mine life in excess of 10 years. Given all of this, we're tragically undervalued. And increasingly, we're also seeing some encouragement from a byproduct of mica, which I'll talk to a bit later on as well. That's a late development in what we're doing here. We're still trying to do the DFS in terms of a gold-only asset, but it looks as though that the production of mica, which we'll be producing anyway, will add a significant amount to revenue in future. Just to look at where we are, and I've got a small video here later on, which I'll put on the screen as well. As you can see, we're very close to the main highway. That highway that you can see on the right-hand side goes to the state capital in Natal, in the coast, about 2 hours away, and it also is the main thoroughfare between that and some of our feeder cities where a lot of our labour will be. The pit will go close to the road. The mineralisation outcrops. There's a small pit there from an old family operation there with a heap leach. And you can see there, the dashed line on the left, top left, is actually the road itself. And that pit, when it's finally finished, will get closer and closer and encroach closer to that road. If we went to the full stage 2, where we went 4 million tonnes per annum down to 300 metres below surface, we'd have to move that road and keep planting. As you can see, there was no shortage of drilling, so we're very confident on the quality of the resource. And the resource itself is quite uniform. It's a 35 metre thick zone that goes down over and it's a 3 kilometre strike. And the only thing that limits the depth is the extent of drilling that goes down. But like I say, there's no shortage of drilling in that. This, in a more of a diagrammatic form, is what it looks like. We're looking at, in initial stage, over the next 10 years, doing 2 million tonnes per annum to take the top part and take about 800,000 ounces out. And then we'll have to look at reassess how we're going to mine that area down below that. There's an issue with strip if we do the open pit, but I think what we're also looking at doing near the surface is taking some of the higher grade material preferentially first. So over the first 4 or 5 years, we'll be mining about 1.5, 1.6 grams per tonne. Looking at this in plan, the picture on the left showed what the original feasibility study was going to do at 4 million tonnes per annum over 15 years. And you can see there that the pit would go across the road. It would have to move that road. In this current plan on the right-hand side, you can see that the pit goes within 50 metres of the road, and it's pretty much like it was in Kalgoorlie. You might have stopped the road when blasting happens. But all of that is also within that red dash line, which is we own the property there. We own the landhold, freehold. There's no communities that we have to move or relocate. So in terms of all the aspects of this project, we have a lot of support, no social or environmental issues. It just becomes really just a factory process to make this as lower cost a production as we can. So just in summary, we've got the usual thing about the board. Good looking board. In terms of our corporate overview, we've got a lot of shares out there, but then that's because we had a few con notes we removed, so we have no debt at all. We have cash that will take us through to 2021. And as I say, the EV based on our current share price is quite low considering the advanced state that we're at the moment. So, I'm sure you've seen some of these valuations. Everyone's comparing and complaining about it. But again, the points to take away. So there's not really much more to add to that unless you've got any questions. Oh, well, might just leave it there then, Amy.